Hello friends, in this video we're going to talk about funding. How can you make money from funding? What is it? We'll break down how to open positions, and this will be a complete beginner's guide to funding arbitrage. The video will be very interesting and useful, so make sure to give it a like. Be sure to watch until the end and leave a comment. Subscribe if you haven't already. Alright, let's get started. Let's figure out what funding is. Funding is the fee that traders pay each other every 8 hours. Funding exists to keep the futures price closer to the spot price, meaning the real price of the asset. Funding can be of two types, negative and positive. And this is very important to remember. Write it down in a table, memorize it somehow, jot it down because this is really important. If funding is negative, it means short traders pay long traders. If funding is positive, it means long traders pay short traders. And this is how we can make money because different exchanges have different funding rates. Again, just to repeat, negative funding means there are a lot of short traders. Because of this, short traders pay long traders. If funding is positive, it means there are a lot of long traders, they push prices up, and the exchange sets a positive funding rate so that short traders are also incentivized to enter shorts and receive payments from long traders, thus balancing the price. That's why it's very important to remember this. Let's look at an example. If the funding rate is positive, let's say 0.5%, and we're in a long position, it means every 8 hours we pay 0.5%. Again, the funding can be charged even earlier than 8 hours. You need to check this on the exchange, and I'll show you where. So don't switch off, watch until the end. And let's look at another example. If the funding rate is negative, minus 0.5, and we're in a long position, it means every 8 hours we receive 0.5% on our position. Why do we even need funding? Perpetual futures have no expiration date, unlike regular futures. That's why we need a tool that keeps the futures price close to the real price of the asset, that is the spot price. And that's what funding is for, it helps equalize the prices. But now for the most interesting part, how to make money from funding. Again, as I mentioned earlier, different exchanges have different funding rates, and that's where we can profit. Let's say, if the funding is negative on one exchange and positive on another, what do? Where the funding is negative, we go long. Where the funding is positive, we go short and receive payments on our position. Again, each exchange deducts funding differently, so it's important to pay attention to that as well. We'll go over this a bit later. And if, for example, the funding rates are strongly negative on one exchange and on another, then say where it's more negative, for instance, on Binance, the funding is minus 2%, and on Bybit, it's minus 0.8. Accordingly, on Binance, we go long, and on Bybit, we go short. And due to the difference in funding spreads, we make a profit. On Binance, we'll receive higher payouts, and on Bybit, we'll pay less in funding fees. This way, you can earn from funding arbitrage. Now, the most important part, let's discuss the risks. This strategy is considered one of the least risky delta-neutral strategies, but there are still risks involved. The first risk is if you don't hedge your position. You see that on one of the exchanges, the funding rate is negative, say minus 2%, and you decide to go long to farm the funding, but then the price drops even further and you haven't opened a corresponding short position. As a result, you will incur losses. You'll either hit your stop loss or get liquidated. That's why it's important to hedge. If you open a long position, then on another exchange, you should open a short position to maintain a delta neutral position. Because if the price moves against you, you'll have an opposite position that will, on the contrary, offset the losses from the other position. This is the whole point of funding arbitrage. We can't predict whether the price will go up or down. We only earn from the payments that traders make to each other. The second risk, funding rates can change. You might enter a trade when the funding rate was negative, but after 8 hours it turns positive and holding the position is no longer profitable. Therefore, even though this is a delta neutral strategy where we enter and wait, we still have to monitor the funding rate and check whether it has changed and whether it's still profitable for us to keep holding the position or not. So keep an eye on the funding rate. Again, on every exchange is displayed at the top above the futures. We'll take a look at that as well. Well, the third risk is commissions and funding fees. That is, if you close a position, you pay commissions. And also, if you enter a position incorrectly, you might end up paying funding fees, and the funding could just eat up your entire trade. That's why we'll go back again to the first point we discussed, how to make money on funding. So, if the funding is negative, we go long. If the funding is positive, we go short. If the funding is highly negative on one exchange, then we go long there, and where it's less negative, we go short, so we can profit from the difference between the funding rates. This is super important. If you don't remember this, you won't be able to make money on funding arbitrage. And the fourth risk is low liquidity. On some tokens where the funding is extremely overbought or oversold, liquidity is low. And when you enter a position, you'll experience slippage, meaning you won't get the price shown on the exchange, but a slightly worse one. That's why it's also important to monitor trading volume, the order book, and how you enter a position. We'll go over all of this together as well. But now let's figure out where to look for these funding rates and how to make money from them. On Arbitrage Scanner, you can find funding rates absolutely free of charge. You don't have to pay anything, just go to Arbitrage Scanner and open the Funding Light tab. Here, funding rates from different exchanges are displayed. There are a lot of exchanges here as well as many tokens. It shows the spread between funding rates and also the current funding rate on each exchange. This is a very convenient tool that you can use absolutely free of charge. The link to Arbitrage Scanner is in the description. Let me show you using the Celo token as an example. Arbitrage Scanner shows us a spread of 0.58. Let's see on which exchanges we have a spread. We see the XT exchange where the funding rate is minus 0.6. Looking at the other exchanges, the funding rates are much less negative. Now let's see where else the rates are less negative. Here on Hyperliquid, for example. Accordingly, between Hyperliquid and XT, there is a spread that we can take advantage of. On XT, since the funding rate is highly negative, we go long. On Hyperliquid, since the funding rate is less negative, we go short. And let's go to the exchanges and see if there is currently a spread between the funding rates. By the way, I checked this trade in advance. And while I was looking, the funding rate actually became less negative. So as you can see, it's minus 0.2%. As I said, the funding rate can change, so make sure to keep an eye on it. It can even change during the period before the funding rate is charged. Within those 6 hours, the funding can change significantly before the rate is deducted. So pay close attention to this parameter. In fact, you can enter right at the end, about an hour before the funding is charged, you enter the position and receive the funding. Accordingly, on XT, since the funding is negative, we need to go long, and on Hyperliquid, since the funding is less negative, we need to go short. We will earn money from the difference in funding rates. Also note that on the Hyperliquid exchange, the funding is charged in 25 minutes, while on the XT exchange, it will be charged in 6 hours and 25 minutes. Therefore, it is most profitable to wait until the funding is charged on Hyperliquid and then see what happens next with the funding, whether it remains negative or becomes positive. If it becomes positive, that's even better, because then we can earn even more here. So if we go long on the XTI exchange and the funding is negative, it means that the shorters are paying us commissions. And on Hyperliquid, if the funding turns positive and we are shorting here, then the longers will be paying us. Accordingly, this is truly the ideal situation. Such situations are very rare, but you need to wait and see what the funding will be in 24 minutes and 35 seconds. Let's refresh the funding trades table again and see what we have. For Magic, there is funding. By the way, I was also looking at Magic. Now I'll tell you how you shouldn't enter a position. Because with Magic, there seems to be a spread even 1.47%, which is actually quite a good spread. But why exactly shouldn't you enter this particular trade? Let's take a look between some exchanges. Okay, let's look between MEXC. MEXC has 2.49, basically the maximum funding, and say some exchange like Bybit. No, actually, that's an excellent spread. Because look, here we have negative funding, minus 2.5%. That's a very harsh negative funding, and here we're going long. And the price here is lower. On Bybit, when we enter, the price is higher. And on Bybit, we have to short. So we short at a higher price, we also catch the spread between the futures. And we make money when the prices converge. There will be a spread that we will take as profit. If the funding is less negative, then we short here. If the funding is more negative, then we go long here and receive payments from the short sellers. And we also earn on the spread. So here the price is 20.88, the prices are already converging. And here the price is 20.67, but in any case, we have a small spread that we can take as profit. Yes, right now there is a good situation on Magic where you can enter, collect the funding, and also take the spread on futures. Alright, now the price on Magic has leveled out. Earlier, I was watching and wanted to show an example of how you shouldn't enter a position, but the prices have already changed. Let me show you an example of how you shouldn't enter a position. Look, here we have a negative funding rate, minus 248. On Bybit, our funding rate is minus 156. So we could make money on funding arbitrage between these exchanges, between Binance and Bybit. But look, here's the catch. If we go long here and the price here is higher, let's take 0.21 as an example. Let's say the price here is 0.21 on Binance and on Bybit the price is 0.20. So we have a spread. We're going long on Binance at a higher price and shorting on Bybit at a lower price. And accordingly, the spread is not in our favor. And when the prices converge, even if the funding gets deducted, we'll make money on the funding arbitrage. Because the spreads will converge, we'll end up with the same futures price on both Binance and Bybit. We'll lose out because of this spread since we took a negative spread that's not in our favor. That's why whenever you enter a position, always make sure the spread is in your favor. Again, take another look. For example, if on Binance the price is 0.21 and on Bybit it's 0.20, but on Binance the funding rate is highly negative and on Bybit it's less negative, yet we go long at the higher price on Binance and start shorting at the lower price on Bybit, that is 0.21 minus 0.20, then we're entering a negative spread that's not in our favor. If, for example, it were the other way around, on Binance the price is 0.20 and on Bybit it's 0.21, then that's an excellent position. We have a spread in our favor because on Binance it's cheaper, so we go long there, and accordingly, we also receive funding since the funding rate here is much more negative. And on Bybit, we short, where the price is higher and the funding is less negative. Accordingly, we profit from funding arbitrage and futures arbitrage. Such a position is excellent to enter. Let's summarize once again. How do we enter a position? If the funding is negative, we go long. If the funding is positive, we short. In other words, we work in reverse. If the funding is negative, it means there are many shorters and the shorters pay the longers. If the funding is positive, it means there are many longers, and the longers pay the shorters. If both exchanges have the same funding and it's negative, we go long on the exchange where the funding is more negative, meaning we'll receive higher payments on our position. And where the funding is less negative, we short. We'll be paid, but we'll pay less than on the other exchange. So with funding arbitrage, we will be making a profit. And again, just like with the magic position I explained to you, if we have a negative spread that's not in our favor, we don't enter such a position. If there's an arbitrage opportunity between fundings, but the spread isn't in our favor, we don't enter. Stop! Don't enter, because you'll lose on the arbitrage, on the futures. Yes, you'll make money on the funding, but you'll lose on the arbitrage on the futures. You should go long where the token is cheaper and short where it's more expensive. Or enter when the token has the same price. Then we enter a delta neutral position, and we only collect the funding, close the position, and end up in profit. That's it. We also need to enter with the same amount. If we go long for $500 on one exchange, then on the other exchange we need to short for $500. Also, don't use high leverage, because high leverage means a risk of liquidation. I also want to remind you that Arbitrage Scanner is giving away $5,000, and one of you will be able to grab this stack of cash. One of you. How to participate? I'll leave a link to the post in the description. They've posted this giveaway. The results will be announced on December 31st. How do you participate? You purchase a subscription from the business tier or higher. And the more months you buy a subscription for and the higher the subscription tier, the more tickets you get. The more tickets you have, the higher your chances in the giveaway. You also get tickets for every approved referral who buys a subscription. That's plus 2 tickets for that, plus 4 tickets for reposting the promotion on Telegram or Twitter. If you have social media accounts, be sure to participate. And plus 7 tickets for a video mentioning Arbitrage Scanner. If you have media channels, make a video about Arbitrage Scanner, how to do arbitrage on fannings, how to use Arbitrage Scanner, and you'll get 7 tickets for free. And one of you will win $5,000. With that amount, you can do arbitrage, steadily grow your deposit, and earn money with crypto. So I'll leave a link to Arbitrage Scanner in the description. Be sure to check it out and take part in the giveaway. Again, there are different types of subscriptions here. For a month, 3 months, 6 months, or a year. And those who get a business level subscription are eligible to participate in the giveaway. That is Business Platinum or Enterprise. Below, we have exclusive subscriptions that grant access to the private Arbitrage Scanner chat, where people share insider information, their deals, talk about arbitration, and explain how they make money with their own methods. You'll also get personal managers who will connect with you via Zoom and help you with your deals. You also get access to various events from Arbitrage Scanner and many other perks. So if you want to immerse yourself in the arbitration community, choose the Guru subscription. This is the most cost-effective subscription. Also, use my promo code NikitaArbitrage, which will give you back 30% of the subscription cost. All the details are in the description. We might not see each other again, so make sure to subscribe to the channel so you don't lose track of me. Check out other videos on our channel. We have a lot of educational content. Like the video, leave a comment, and let me know if you enjoyed it or not. And I'll see you in the next videos. Bye everyone.